Hello and welcome to another edition of Benzinga TV. I'm Chris Scalisi here with Brent Slava, and today we're going to be covering one of the most persistent news stories that have sort of been coming up over the course of the year, and that is everything cryptocurrency.
Yep.
And it's pretty obvious looking at the facts why this story keeps coming up and why these names keep getting mentioned. Here are some figures from just this year. Through 2017, Bitcoin is up 240% at $3,534. Litecoin is up 962%, up at $46. And Ethereum, one of the biggest gainers over the course of the year, up 2,737% at $227. And this is just compounded by big names in finance sort of talking about it. Just this week, CEO of JP Morgan, Jamie Dimon, came out calling these cryptocurrencies a fraud, saying they were going to explode.
Explode like to the downside.
Yeah, not bad. I mean, he even said someone's likely to get killed. So pretty strong language. But then 2 weeks previous, Fidelity announced they were going to start accepting Ethereum transactions. So we're going to break down what exactly these things are. We're not experts by any means, so we're going to give you a very bare bones definition.
Good warning.
But Brent, could you just sort of give us a primer on what cryptocurrency means?
So I mean, it's very similar to a currency. It works on an exchange, kind of a couple differences than like a normal currency. It's definitely digital. It's online. It's aimed at being secure. It's aimed at being anonymous. And one thing that is certainly different than other currencies is it really aims to try to avoid traditional banking. It sort of like, finds a workaround there. One thing that we didn't mention yet, which is very big in cryptocurrency, is something called cryptography. And it's basically this sort of process for converting legible info into a kind of code. And it basically uses a limited number of entries into a database, and you can unlock more parts of the chain by kind of like completing this process.
Yeah,
right?
It's good you said chain, because that is another fundamental part of these cryptocurrencies is blockchain. It's this way of processing data essentially, and the cryptocurrencies use it. It's not exclusively for cryptocurrency, but it has been adopted by pretty much all of them. And basically what blockchain is it's a ledger. It's basically keeping track of all these the millions of transactions that are occurring and making blocks within this long sequence of blocks.
Right?
Blocks on blocks.
Yeah.
And each of these blocks contains recent transactions. So it's basically just a open recurring ledger, and this ledger is shared between thousands of different computers, all processing this data and sharing this data. That makes it more transparent and keeps it sort of accountable, so there's potentially less risk of fraud, as they say. Obviously questions about that persist. But what's sort of fascinating about blockchain is that these currencies, they make new money by using this ledger. It sort of works in a way of supply and demand.
That's the mining part of it, right?
Yeah, it's called mining. So what people do is they dedicate their computer RAM toward mining cryptocurrencies. And that essentially means that they are aiding in creating more pages in this ledger of the blockchain.
Good way to
put it. So it's this constantly updating thing. So what they do is they put their computers towards processing all these algorithms, and whoever can process the most algorithms within the shortest amount of time wins the chance to mine a new block in the blockchain.
Sort of unlock a cryptocurrency, unlock a Bitcoin.
So then they are allowed to process all the recent transactions of that block, and they are rewarded with cryptocurrency.
There you go.
So yeah, I mean, that is pretty complex stuff to understand, and again, there's definitely more to it, but we want to move on to sort of the biggest thing that sort of has been developing in cryptocurrencies recently is people making money off of it by mining.
Right. So kind of like, who is making money, right? That's kind of what you're asking. So if you're an individual and you want to get involved in cryptocurrency, you can do this. However, it's becoming increasingly more difficult, because what's happening is, you touched on it a little bit, what's happening is these pools are being created, and these pools of Bitcoin and cryptocurrencies, exchanges, traders, they're combining all their power together. As you said, they're using all their RAM combined, and they're getting more processing power. They're able to run the algorithms more and more algorithms. They're able to run longer blocks. They're able to access more. So it is possible to do this on your own. However, again, it's becoming increasingly difficult. And right now, a lot of the sources that are making money on cryptocurrency are basically these like pools.
Yeah, basically mining companies.
Ooh, I like how you put that.
Consolidating all of this RAM from hundreds of different users who are just able to combine that power and win blocks, win the chance to mine blocks.
There you go.
So yeah, that is your primer on cryptocurrencies. Again, there's a lot more to this that we did not cover and might not be capable of covering, but we do have people who are on the case at benzinga.com, so be sure to check that out, as well as your Benzinga Pro news feed for all the latest on these cryptocurrencies, and I'm sure many more in the future, unless it all implodes, as Jamie Dimon suggests. Again, I'm Chris Dyer-Scalisi here with Brent Slava. Thanks for watching.